talked about the signature tools, and we talked about, we looked at the spread chain today, talked about the long option finder, stock repair, how powerful that could be, the insurance tool. Now, the market sentiment tool on the home pad. Frank's question, finally, can you comment on how you use the market sentiment tool again, and when does the sentiment tool update? The sentiment tool updates around 4:45 to 5 o'clock is my understanding, Frank. It usually happens while we're on the webinar. I usually can catch it when we first go on, change over from the introduction in the webinar to go here, and then the next time we refresh the page, it has already been updated. So this is updated today, and of course, we've had 2 sell warnings in a row. Am I nervous about the 2 sell warnings in a row right now? Not yet. Okay, so let's start from the beginning. We have many reviews of this already on YouTube, but let's start from the beginning. What is this market sentiment tool? This is a tool based on 13 indicators that Ernie settled on after testing a variety, 50, 60, 70 different criteria, and evaluating how those performed against market performance in predicting market moves. You see some common things here. Put call volume ratio, we're in a bearish range. SPX days number up, almost at bearish. SPX gap over the SMA 20, that's bearish. The VIX, the volatility index, kind of in the middle. Trin is actually bullish right now. The RSI for SPX is bearish, of course. So we've had this long run, and these things for SPX MACD gap, stocks over SMA 100, SPX gap over SMA 100, they're leaning towards the bearish because it's been on a strong run. But we're still seeing some neutrals, and we're still seeing some bullish as well. Now, what do these sliders mean? What do these mean? Okay, so what Ernie did is he looked historically over time. And this histogram graph, what it's showing us is the points historically of the put call volume ratio in this case over several years of time. And so as we can see, when it gets, we're currently, at 0.46. Okay, and it's usually a bearish indicator when it's below 0.6, when the call volume is extending well beyond the put volume. Okay. And as you can see, historically, when we reach this range, very infrequently does it ever go into this direction. It does, but very infrequently. It wants to go back to this range. How's that going to happen? You're going to start seeing more puts than calls, so this ratio has to move back up, or this one here at 0.46 has to move back up. And then, of course, Ernie looked at these numbers, looked at the histogram, and they said, okay, now, when it hits a point, okay, so this is just showing me back to 2021, but when it hits these points, so here we're at, you can see here, a market was trending along, got up to about 0.55 in this case, and that's when it started to pull back down. Okay, we hit this mark here while it was pulling down, and now it's starting to move back up. Naturally, you start seeing this go in this direction, but it has been climbing recently. You see that? Put call ratio has been moving up from where it was a couple days ago. Not a lot, but it was at 0.4. It was at 0.38. Now it's going higher in this case. Okay. So that's what we're kind of, that's how this is done. And it's done for all 13 broad-based indicators. Now, Frank, how do I use it? When I see sell warnings, yes, especially several in a row, I'm considering management on positions, but not a panic yet. Okay, what does management on positions mean? Well, if I think we're nearing a top, the sell warnings are appearing, I might sell calls on my married puts, as we mentioned, that have been running. If we get a pullback, I might see some good returns on those positions. I might lighten up some of my bull puts. If I have bull puts open right now that I can close for a reasonable 60 or 70% profit, 80% profit would be the target really, and the market's going up, may consider canceling some contracts or pulling back. I may consider protecting stocks that I have with a put, for example, or I may consider buying, let's say, VIX calls. Now that the VIX down to 16.69, I might get better prices for those VIX calls, anticipating a decline. But this is preparation. I don't usually act right now. Yes, we are in an extended run. I expect an easing at some point soon. We also know there's a lot of stimulus money that recently came out that's being influxed into the market, and the Fed is doing things with that also to boost that up in that case. So that might be still driving this increase in the market. When do I look, I hate the term, but when do I look to panic? This is the panic time for me, okay? When I start seeing 7 and 8 bearish signals, no bullish, and we get that strong bearish sell, specifically 2 bearish sell warnings in a row, and this is back in January 8th of 2021, that's when I start actively putting puts on stock positions, maybe rolling up a put if I have an opportunity to cancel the risk, sell calls against the married puts, lighten up on my bull put credit spreads, maybe buy some puts on SPY, buy calls on the VIX in anticipation of a pullback or a downturn. Okay, so when I start to see these 2 bearish sells, Frank, how do I use it? What positions do you have? You have bullish positions now. Use the custom spread tool. What is your risk if there is a 5%, 7% correction in this case? What would your exposure be? Do you want to close it now and take some profit off the table? Do you want to protect those positions? You know, how would you protect a bull call debit spread? Well, you might just add a put to it. Or you might just lower the number of contracts, close half of it out for a profit right now if you're expecting a pullback in that case. Close them all out. Don't open new bullish positions. Okay? And then once the decline happens, if you start to see a strong bullish sell, this wasn't even that big of a move. I mean, it went down to 37,114, I think was the low from where it was at 38. That's not even as big as a drop as I was expecting at that time. But yeah, it's been in the noise recently, but it's still just been wanting to push up, wanting to push up. I haven't seen 2 bearish sell warnings in a row yet. When I start to see that, that's when I'm going to start to take action in this case. Yeah, you bring up a great point, Robert. I never noticed it before. These alternate. I'll have to talk with Greg about that. And Ernie has a reason behind this. Robert's question was, it would make it easier to scan if all bearish labels were on one side while all bullish labels were on the other side. Ernie kind of did this for a specific reason. Okay. Why is this one bearish on the left and bullish on the right? Why is this one bearish on the left and bullish on the right? Why is put call volume ratio bearish on the left when it's bullish on the right? And I think there's another one. Let me go check. I'm gonna lose my circles here. Okay, no, it's just those 3. And why? Because these, Robert, are considered to be contrarian indicators. The VIX is a contrarian indicator. When the VIX is bearish, that means the market's bullish. When the VIX is bullish, that means the market's declining. Okay? And in this case, so is the put call volume ratio. It's considered a contrarian indicator. So that's why Ernie has it over here on the other side. Okay? That's the reason why. Okay? Okay, Frank says, but the market is going to all-time highs with sell warnings. Well, yeah. Okay, and I kind of, it was neutral, 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 and we're getting into these sell warnings, which historically we've seen. And I just explained why, Frank. Okay, the indicators that work best for the broad market, Frank, was SPX. Why are you seeing sell warnings when it's still going to an all-time high? It's warning you that potentially a correction is coming. This gap over the SMA 20 is overextended. Okay, the number of days the SPX is up usually pulls back a day or two, and that's just a low one. But the RSI on SPX is extended. What happens when you see an extended and overbought market? You tend to see an easing. You tend to see a relaxing. So yes, we're hitting highs right now. The sell warnings just started coming up 4 or 5 days ago. It was neutral all the way to that. Okay, this is not saying what the market is doing right now. This is telling you based on historical precedent, based on historical trends, okay, of many, many years. Let's go back here and see if I can grab this. There you go. Yeah, so back to 2008. Okay, that's the time frame, 13 years. That historically, when the SPX RSI enters in these ranges, a very small percentage of the time historically does it continue to go up into this 83, 84, 90 range. It pulls back. How would the RSI pull back? Because the market declines. That's what it's telling you. It's telling you that historically, we don't normally see these. Something usually has to give. And I mentioned, of course, Frank, in that conversation, that we are in a position now where the market sentiment is seeing these tools. What doesn't it know? It doesn't know the fact that there's a whole bunch of stimulus being pushed in, and the Fed's doing different things that are keeping this up as well. Okay. In general, Frank, it depends. It depends on the warning. It honestly does. Okay. So no, I can't do it here. This one here, I just had this on a coaching session. So here the prime was at 38.24 when the bearish sell warnings went up. I think that was the highest it was, okay, before a pullback started. And that was on the 8th, right? Yeah, 1/8. And the low was hit on 129. This is about 29 days. I'm going to pause the screen, ladies and gentlemen. I've got to change something here. I'm going to clean up all my things. Apologies, folks. I know you're not looking at what I'm seeing right now. I just got to do something else here. One moment. We're going to go to my account because I don't have the full history access on the webinar account. Okay. And let me make sure you're seeing what I'm seeing. Yes. Okay, great. Why did I do that? Because I want to go back in time. Oh, that's interesting. What's that? That's all of the bullish buys at the end of 2018. Remember that disastrous decline from October, then a hesitation November, and then that drastic decline into December. Okay, but I'm still going further back than this. There's some interesting very bullish buys there too. And sorry for the scrolling. I just want to get back to where I need to be. And I got to go here. Sorry about that. So we got to refresh it to go back a year, 2 years actually. There we go. All right, what in the world is this? Okay, look at these numbers, 9, 10. These started hitting and the very bearish sell in 112. The market was up for this time frame, right? For January of 2000, it had been doing a great run at the end of December of 2017. Coming into January 2018 was a good movement upwards. And then we started seeing these strong bearish sells with these high bearish warnings, okay? Some severe ones. So what was I doing from about 118 to about, 126? Getting out of my bull put spreads, closing my calendar spreads if I could get for a profit, adding extra protection to my married put positions. And I still had 3 bull puts open. I bought calls on the VIX. Why is this relevant? Started on the 12th, about 20 days later, Frank. Where are we? 2.5 to 2.8. 10% decline roughly, in this case, in the market in a sudden 4-day period. Why? This was the start of the China trade tariffs, when the administration at that time decided suddenly, let's go to trade war with China. Market didn't like it, but it was the system. Market sentiment did not know that. It didn't know that that was essentially going to happen. But what it did know is that 9 of the 13 indicators, 8 of the 13 indicators were all extremely bearish, and it was screaming a bearish sell warning, and it happened. Okay. Now, I lost on all 3 of my bull put spreads that I didn't get to close beforehand because they weren't at a profit. They actually all were expiring on the 9th. I closed all 3 of them for a 50% loss on the first day. Glad I did, because 2 days later, they were all at 100% loss. So it was better to take that 50% loss. But the VIX calls that I bought, 8 or 9 contracts here, when the VIX spiked up to about 60, I think at this time, more than paid for the loss on the puts in that case. So that worked out well for me. And it was because of the market sentiment indicator as well. So that's how I use it. That's what these are showing us. And Robert, that's why these 3 are reversed, because they are contrarian indicators. That's why the bearish is on the left and the bullish is on the right, because they're contrarian indicators in that sense as well. And of course, there's a brief help video here, but also on YouTube, as we talked about before, there's several reviews fully on the market sentiment tool. I think we did, what did I say in our yearly review? I think it was 12, maybe 14 videos on the market sentiment tool just last year alone. Yeah, so there's a quick review, concepts of the market sentiment, another quick review, market sentiment review February 5th. That was the last time we did it. So that was about 2 months. Oh, it wasn't 2 months ago. It was, yeah, I think that was the last full one we did. Okay, so in any case, there's other information there. You want to see more details on the market sentiment as well, you can check that out, okay? No, Frank. Okay, don't dump the longs, protect the longs. Frank says, so I have less than 20 days to dump my longs. No, we're not at the panic yet. I haven't personally seen 2 bearish sells in a row yet. I mean, sell warning, not bearish sell. And don't dump the longs if you're still bullish on them. Protect them. Hedge them. Sell half. Okay, I can't give you direct trading advice. You have to decide what's best for you. I can only show you how I use this tool. I can only show you how it has worked for me in the past. And to tell you the truth, when we were just looking back at January and we were looking at those bearish sells we started seeing in January 2018, I wasn't saying, oh, I have 20 days from now to do it. I was taking action then. I didn't know when it was going to come. It could have come the next day. It could have come 10 days later. It did come 20 days later. That's just happened to be the 2 examples we looked at. In general, that's how I use it, okay? But when I start to see those screaming red sell warnings, that's when I start my management approach. Okay, I don't wait for it. I don't anticipate, oh, it's going to be 20 days, so I can wait 10 days. No, I start lightening up. Yes, lighten up. Ernie would tell you, yes, start maybe lightening up on some of your long positions, but protect the ones that are working out for you. Why not? The market's been going up. The sell warnings are triggering. That usually means that volatility is low and price is below. Add some protection to those positions. If the market falls, you've made most of it back with that put and locked in some of your unrealized profit on those positions. And when it ends and you start seeing the buy signals, you can start going back in or adding to your existing positions. But I cannot tell you what to do with your portfolio. I apologize. I cannot tell you that, yes, you should do that. No, you should not do that. I'm not your advisor, unfortunately. I am an options educator. I can tell you how I use the tools. I can tell you how I prefer to use them. I can't guide you in your portfolio that when you see a market indicator have 2 bearish sell warnings in a row, that you should dump all of your long stocks or all of your long call options that you have. I will not tell you that, and I cannot tell you that. Okay, that's something that you might want to hire an advisor for in those situations. In that case, I can come as close as I can, but I cannot give you direct advice on what you should do. I can tell you what I do. I can tell you what Ernie does. But that's about the extent of it, Frank, in that case. I'd love to tell you be able to tell you what to do, but hey, sometimes I get it wrong too, and I don't want to get you wrong. Okay. Not usually with the market sentiment tool, I'll tell you that. Okay. Usually that's been really, really powerful for me, powerful for Ernie, powerful for many of our subscribers to see the time frame, to get out, protect what you have that could be at risk, lighten up a little bit, and then wait for those buy signals to start coming back in. All right. Well, ladies and gentlemen, that just about wraps up all of our questions that we had. And Frank, I do apologize that I took so long with that. It's just we had so many questions related to the same topic of discussion that I wanted to stick with the spreads as long as possible. And yes, get to our final review, not final, I don't want to say that, but get to our next review of the market sentiment, which we'll go ahead and put up, of course, as its own section for the April 9th. Maybe a little bit we'll have a discussion, the discussion there for Stephen on the top 5 things of those two together. Okay, what was I doing? All right, so I apologize, ladies and gentlemen. Just want to, of course, remind everyone here. All right, there we go. So from what I just talked about before with Frank, of course, not being your advisor, I can't give you direct advice. I would love to, but, in those questions, there we go. Sorry. Something went weird on me. I just wanted to remind everyone, of course, that today's material are my thoughts on your questions, designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as recommendations or direct trading suggestions. Do not open a Mabel put on Masco or on Berry Plastics, because they both have earnings coming up between now and May expiration. We just use those as an example. Options involve risk, as we all know, may not be suitable for all investors, but we'll still do our best to try to keep as much education as possible for everyone to get us to where we need to be. Now, if you haven't done so already, remember you can take a 14-day free trial at any time. So go to powerop.com, put in your name and email address. No credit card is required. You'll have full access to the tools we showcase today and more for 14 days. After that, the monthly subscriptions start at just $45 per month. You can cancel at any time. There is no contractual obligation. Of course, any trial member or subscriber has access to free coaching with Ernie or myself at any time. You can just schedule a coaching session right from the website. You can also upgrade at any time if you want to check out historical, move from delayed to real time, and more. Okay, in that case as well. We talked a lot about this today, the free education. archived webinars. You can go to powerup.com/webinars.asp and scroll through those. You don't even need to be logged in. But the YouTube channel we showcased a couple times today, you can go right there, go to the videos link, search on the channel for calendar spread, poor man's covered call, iron condor. You can see a lot of our videos all related to those topics. I try to name them specifically with a strategy in mind or a concept in mind, so it's much easier to find for everyone, including myself when I have to find them on the webinars. Thank you all for a great session. Kip says, great session, Mike. Great expectations for the product coming up, but no pressure. Yeah, done in different stages. So I'll be honest with you, Kip, the first couple modules of that might not be as great as some of the webinars we've been doing recently with some of the new formats and artwork, but the content is excellent, I feel. You'll see more about that soon. And Frank, of course, says, hey, no problem about the advice. It's Miller time. I think, indeed, it sounds like that, Frank. I'm going to get some maybe wine here after a wind down. And Robert, of course, thanks very much. He says, a great session. I'm glad you enjoyed it. Robert, thank you all for coming and bringing your questions. If you think of any other questions at any time of the weekend, just send me an email to support@powerup.com or support@radioactivetrading.com. Remember, you can also call us during market hours. Trial members and subscribers can schedule a free coaching session.